There are 90% odds for a December rate cut. So let's see, is it all hype or is it actually real? And I want to go over all the futures that you can see on the screen right now and how potentially the rate cut can affect it, and also go over some graph analysis. So let's begin, and we can begin with gold and silver. The trend is really not clear. It's possibly a continuation of an uptrend. It kind of went up and then consolidated. Silver exploded up to all-time highs, while gold is still kind of consolidating. The volatility is good for both of them, which is a good thing. But obviously, we are waiting for December 10th to see if there's going to be a rate cut or not. There's a 90% chance for a rate cut, but if you remember 2024, it was a similar situation, and there ended up not being a rate cut. It was December 18. Market dropped 3% on that day because the Feds did not end up cutting the rates, and a lot of people lost a lot of money. So for me, this is a good enough reason not to open any position just for now. Now, it's kind of the same thing for copper. The trend is actually somewhat of a side trend, even though copper went up lately. But there is a few more reasons for the price to go up or down, mainly up, and this is multiple mine disruptions, and supply is way tighter for copper, specifically going into 2026. So this is another reason why copper might keep going up, regardless of a rate cut or not. But for me, if there will be a rate cut on December 10th, it's an easy decision to make to open a position on copper and possibly on gold. And if there's no rate cut, then we will have to see how the metals react to that. Next, we have crude oil, which is inside a very big side trend, and there's a lot of things going on for crude oil. Volatility is low, and as you guessed it, rate cuts can also affect the price of crude oil. So lower rate cuts are bullish for crude oil. Basically, it means it's a low rate cut or a low rate. It's stimulating the economy, which means more demand for energy, which is crude oil. Now, at the same time, there are some critical reasons for the price to go down. So there's a narrative for ample global supply, and also a possible peace deal between Russia and Ukraine, which at this point is not really moving anywhere. But you cannot just kind of take it off the table, because things can really quickly progress there, and then we might have finally a peace deal. You don't know, I don't know, but at this point, again, waiting for the rate cut, and crude oil, regardless, is just something I'm not sure what's going to happen with it currently, given the state, specifically because of the situation between Russia and Ukraine. Now we have wheat, and wheat has absolutely no correlation to rate cuts. It does, everything has a correlation to the rate cut, to a cheaper dollar, but at the same time, it's nothing. It's not a strong correlation, right? So right now with wheat, we have China confirmation of purchases, which again, we didn't really get any specific even information that China should be buying wheat, but this is just kind of the assumption. This is the narrative. But for now, wheat is kind of moving sideways, and the other big thing is that can make the price decrease is an ample global supply and Russia-Ukraine peace deal, which can drive the price of wheat down even more, because Russia and Ukraine export over 30% of the wheat to the world, right, or in the world. So again, pretty big news, but volatility is low. So again, I don't really have anything I can be looking at here to potentially open a position. Next, we have soybean, which is kind of the same thing. And here the narrative is really, really strong for China purchases, because China is one of the biggest single buyers of U.S. soybean, and they've made a deal that the U.S. or China would buy 12 million, I think it's 12 million units of soybean from the U.S. by the end of the year. And right now we only have confirmation of about 2 million pieces, or I think it's 2 million tons actually. And which is obviously far from the 12 million that was agreed upon. So price went up on the hopes that China will buy a lot of soybean, but at the same time, it hasn't been buying that quickly. It's been buying really at a normal pace for this time of the year, right? So this is just kind of another Chinese streak that happened back in 2016, 2017. Similar situation, and they ended up just kind of buying soybeans like they would normally do, and never really buying the massive amount of soybean they promised, or there was the amount that was agreed upon. So with that, let's go look at the graphs and see if we can learn anything else from what's going on so far, and what can happen potentially on December 10th. So what do we have here? We have the ES futures options, or futures specifically, sorry. The price has been very close to all-time highs, so a lot of people are very optimistic for a rate cut. Again, I think it's around a 90% odds for a rate cut. At this point, somewhere around those 3 days, the odds were 30%, and they really quickly flipped to 90%. So if it flipped to the upside so quickly, it can definitely flip to the downside, especially if they end up not cutting rates. So this is a big thing to watch. If I would have any exposure to the downside, I would really, either heavily hedge to the downside, or I would just close all my positions if they're profitable already, because you just don't know what's going to happen. Even though there's a high probability, at the end of the day, we don't know what's going to happen. And if you don't know, and you're still gonna end up making a play, then it's complete gambling, especially when you sell options. But like a lot of people sell a lot of puts on the ES, on the SPX, and they end up losing a lot of money on a single down move, and volatility expands. So this is what I think for ES specifically. For gold, as you can see here, it's gonna went up and then it's gonna consolidate, but it's gonna still seem like it's gonna going up. And rate cut will cause it to probably go up slowly and surely even more. Now, historically, in the inflation environment that we are in right now, gold is probably going to go up. Now, I don't know that for sure, but if the rate cut happens on December 10th, then we can definitely sell some puts and enjoy a really smooth trade, most likely, because there will be no reason for gold to kind of go down. Now, same thing for silver, but gold and silver are pretty correlated, so I'm going to choose either or, probably gold. Now, same thing with copper. As you can see, it's going to be going up on supply disruptions and on the hopes of a rate cut. But we'll see what's going to happen. It will be a really good chance to sell some puts if the rate cut ends up happening. And if not, we will have to decide what will be the decision to either open something or not, or just not open anything. So for crude oil, like I said, it's inside a big side trend. It's really been moving up and down, nothing specific. And if you just kind of look at the news, there's just tension and energy demand optimism. Again, like we said, a rate cut is very bullish for demand for crude oil. So nobody really knows what's going to happen in these situations. From my experience, it's just best to wait, because you usually the markets don't have uncertainty in them for too long. Markets like to be really certain, and when they become certain, it becomes really, really simple to trade them as an option seller, right? So there's just a period of time that you kind of have to wait, or I have to wait, which I am. Don't have any positions on currently, and then once everything is kind of passed on, it will be much, much easier to trade, like it was in the majority of 2024 and even 2023. So that's all I got for you. And if you have any questions, let me know. Hopefully it was useful. Hopefully it will help you save money or make money, which it can be one or the other. It will be great. So thank you again, and I will catch you in the next one.